Hello, everyone. It's a real pleasure to be here, and obviously I'm joined on stage by Kirsty, who is the investment director at Seedrs, and I'm going to try and get your name pronounced completely right, Mads Dalsgaard, and you're the CMO at Funderbeam.
Yes.
So just before we started, I thought it'd actually be good to get a little bit more of an introduction to you guys, and so to let you take over and tell us a little bit more about your role at the company and how both of the platforms that you both work for differ from competitors in the space.
Sure. Do you want to?
Go ahead.
Sure. Is that on? Hi. So I'm investment director at Seedrs. I've been there for about 2 years.
Okay.
Background was a corporate lawyer. Made the jump into sort of fintech startup life, and couldn't be happier with the swap. So Seedrs, we are the leading equity crowdfunder in Europe. So we're open to businesses throughout UK and Europe. We are very much on the equity side of things. We don't do sort of debt products. We don't do rewards. It's very much shares in your business. We started about 5 years ago, and the first platform in the UK to get authorized by the FCA.
Good. And you, Mads?
Yeah, so my name is Mads. I'm originally from Denmark, but I live and work at Funderbeam based in Estonia. We have offices here in London as well, opened up recently. And yeah, like Seedrs, you guys are like the crowdfunding platform, so it sounds weird to say that you're the old guys, because you're quite young still. But compared to us, you're like, we look at you and say like, all right, that's the direction we're moving. But what Funderbeam does is essentially we also have what Seedrs is doing, which is equity crowdfunding. But we don't consider ourselves an equity crowdfunding platform. We consider ourselves a secondary market for people who have invested through equity crowdfunding campaigns or any other kind of investments, and we make those investments tradable. So it's kind of like, you can explain it kind of like a stock market, but for startups.
Okay.
And I mean, we would love to work together with all kinds of different crowdfunding platforms and provide a secondary market for them. But to begin with, we also created our own equity crowdfunding platform to get some startups on. And we launched the first campaigns back in March, and the first company started trading in July. So it's up and running. It's working. I mean, we are the biggest in the Baltics, maybe.
Competition.
So yeah, purely based on size, we're not big, but we are basically the only company in the world who is doing what we're doing, combining the primary market, which is equity crowdfunding, with the secondary market, which is trading. And then on top, we have a data intelligence platform for startups and investors, because we believe you need access to good quality data, both as a founder and as an investor. And the existing solutions for finding data and companies are very expensive.
Sure.
So we do it completely free for anyone.
Cool. And I guess my next question was actually going to be for the audience. I'd just be interested to know whether anyone in the room has actually considered crowdfunding or has crowdfunded. Any? Oh, okay. That's interesting.
1, 2, 3.
Yeah. So the interesting thing will be to see whether we can actually convince them by the end of the talk, to those of you who haven't, to do so. So I know that obviously, the traditional route for some startups and tech entrepreneurs out there is to go through the VC funding route. But obviously, the data out there suggests that crowdfunding is becoming more of a thing, which is obviously great for both of you. But how can startups, especially when they're rather early stage, actually harness the power and the opportunities that raising money that way actually offers? So, Mads, you?
I mean, I very much agree with you. Like as I said, we do the data analysis as well, and just comparing. Recently, we had the end of the Q3, and I compared the data for the same quarter last year, and looking across all types of funding globally, funding had gone down by 55%, so more than cut in half. But in the same period, alternative financing had more than doubled. So it's like outperforming traditional funding by a factor of 4. So it's definitely significant. And I think it's very important to stress that the like VC versus crowdfunding makes absolutely no sense, because it's completely different things and different stages.
Sure.
And I've talked to a lot of different kinds of investors, from like small ticket crowd investors all the way up to VCs and angel investors in between. And a lot of them, especially the angels, they kind of use crowdfunding as a validation tool, as a like they use it for due diligence.
Like less risk averse for them to jump in, I guess, and.
Yeah, so if you see a company that's already managed to get like 200 people so excited about your product that they're willing to give you money just for equity, like not rewards, but just for equity, that doesn't, they're not getting anything up front. They are showing that they believe so much in this that they want it to exist, and as an investor, that's a very good signal to go with. Like, I mean,
Absolutely, and yeah, we're certainly seeing that it's not crowdfunding or VC now as well. We certainly, I think, play an important part for some of the earlier stage businesses that aren't quite ready for VC funding yet. We have a lot of businesses that raise with us sort of at that sort of more seed stage. But right on through, we often co-invest with the VC, and VCs are becoming more and more open to that, partly because of the validation idea. You know, they've gone out and they're showing that, you know, people believe in this product, believe in the business, they want to use it, and want to invest in it. So we're sort of, it isn't necessarily either or anymore. It can be both, or it can be at different times of sort of in the stage cycle of the company.
Sure, so that actually in itself is a sign that the crowdfunding industry is maturing if VCs are actually keeping an eye on companies that have been funded, but also I believe that a lot of angels actually get engaged before the campaigns go online, with startups securing funds offline before they actually launch their campaign.
yeah, so I mean, we always prefer that the companies come and already have an angel investor who's putting down a significant amount of what they're looking to raise. And it's kind of a like mutually beneficial thing, because the angel gets to say like, okay, I want to invest 50,000 or 100,000, but I think the company needs 200 or 400. But I can then see like, okay, can these guys can they do their marketing? Can they get in front of people enough to come with the rest of the money? And I mean, we do also do just like closed syndicates, where it's like only investors who like 2, 3, 5 investors who have a company they want to invest, and they simply just do it through our platform, so that they have the liquidity, they can sell the investments whenever they want. But I think it's brilliant to get the crowd involved, because it really does push you so much further very, very quickly.
Sure. And you mentioned that you prefer entrepreneurs to have an angel involved before they actually join the platform. But I was just wondering both of your guys' perspective in terms of what actually criteria is required, and whether there's a vetting or screening process before someone joins the platform. Because obviously, I mean, I used to work in the blockchain space, and I'm not going to go off on a tangent, but that's quite an obscure scene in itself, and there's a lot of people using the blockchain name for, you know, illegitimate users. So you definitely have to be very hot on who, well, me as a journalist, on who you actually write about and such. So I just wonder if you're giving the people the opportunity to invest in companies, what kind of work takes place behind the scenes, for example, on Seedrs?
Sure. Well, there is a screening process, obviously, even to get on. We try to sort of steer clear of being the judge of a good business. And frankly, that's the whole idea of crowdfunding, was to open it up and to sort of allow investors to make that choice for themselves. So we don't want to be, we're not sort of the gatekeeper in that sense. You know, we don't want to be the person that passes up and says no to the next Airbnb. So provided there is sort of a legitimate business there, then we generally will go ahead with them. But we will have a chat to them about sort of what's involved in crowdfunding, the effort it takes, and lots of people could have sort of drop out at that point. And then the rest of it is very much about verifying the facts that they present to investors. We sort of say it does what it says on the tin. We sort of go through everything that they're presenting as facts about sort of what they've achieved so far, what the business does, its numbers, if they're presenting revenue figures, will require them to provide evidence of all that to back it up. And that's what allows us to sort of approve it as a financial promotion, so it sort of satisfies our regulatory obligation. But I see that as the most sort of crucial part of what we do in terms of protection for investors.
Sure, and actually what you mentioned about the effort involved is a very interesting point, because a lot of entrepreneurs that I've spoken to over the last couple of months have said, I went into it head first and actually realized just how much time and effort and resource it would take on my behalf. I think people back in the day, when there was a lot of stigma around crowdfunding per se, used to see it as a maybe lazier way or easier way of raising cash. So I think that is definitely something to keep in mind. And the other thing I wanted to touch on as well was, is crowdfunding right for every business within tech or any kind of business, specifically startups? Because I imagine that your business model obviously would have an impact on whether you're able to raise funds that way.
Yeah, I mean, sorry.
Go ahead.
I mean, a lot of people say, can B2B businesses crowdfund, because they see it as sort of going out to sort of consumer investors, and it's got to be something that the consumer uses and can touch and feel and knows about. I don't think that's necessarily the case. I don't think it's right for every business, but we have a lot of very strong B2B businesses on there, and I think they can be an interesting proposition for investors. It's more about the ability to just tell your story and to explain your business and make it understandable to the average investor who isn't necessarily in your industry.
Okay.
Exactly, and I mean, right now we're actually running a biotech company on Funderbeam, and it's definitely harder to communicate, but I think as you also said, that it's about the story and can they tell their story, and I don't know anything about Funderbeam, but I can tell that these guys have 30 years of experience. They're super passionate about what they're doing. They really like and then there are other people who know stuff about what they're doing, and they tell me that it's legit. But yeah, I mean, it's of course it's more challenging when it's like very, very technical products. Or like also there are of course some companies who are just not suited for running a campaign, like doing the actual communication works, telling the story, and just kind of being on it. And like as you said, like that people think it's an easy way to get funded. It's not. I mean, I wouldn't say it's easier or harder than raising from angels or VCs. It's like all funding is really, really hard. It's just maybe hard in different ways, and it's expensive in different ways. I mean, you don't need to produce a video to go and talk to VCs, but then you might end up spending very much time like traveling around and going to meetings, and it can also like really drag on for a long time. So yes and no. Like, I mean, no, not all companies can crowdfund, but I think a lot more than they think.
I think, and one of the important elements there, I think, is having a crowd. The idea that you these days of putting your campaign up on a platform and with sort of no following and thinking that the platform's investors are just going to jump on it, that's a complete misconception. The way to really get your campaign going is to get your audience and your crowd involved. And so we have lots of B2B businesses that come with these great, we had a Free Agent, for example, raise with us last year.
Okay, yeah.
And it's accounting software. And,
Not very sexy, right?
Yeah, right. Like it couldn't get more dull. But they have their users of it are sort of small accounting firms who use it, and the users are all just fanatical about it. Like they love it, and so they really managed to kind of get their own users who are all sort of accountants with a bit of disposable income who would look to invest in something like that, and really nailed it through that. And they actually they just floated on the AIM market a couple of weeks ago. So.
I think what you mentioned as well about the crowd is interesting because it's not only just a way of raising cash, it's actually a way of gaining traction, and it's essentially a viable PR tool done right. If done badly, then I guess it's probably a disaster. But that also brings me on to my next question. What are the do's and don'ts of crowdfunding? So what should people think about before launching a campaign, and what they should avoid, basically?
I mean, as you said already, like don't come on the platform and expect the stuff just happens. You have to really, really push it. and then like really do focus on your story. Like no matter how technical or like B2B focused you are, in the end, it's a human who is deciding to click the button,
Sure.
and humans
Not a machine yet, right?
Not yet. I had the AI.vc thing.
Once we automate investors, sorted.
No, but like at least for some time, it's going to be people, and people don't connect with companies. People connect with the people behind companies, and that's the most thing for me.
Yeah, absolutely, and planning, planning for it. So and there is a bit of that sort of people coming to the platform suddenly as like a last resort. You know, the VC funding round fell through or whatever, and can I get this up and funded in 2 weeks? And it's just a non-starter. It is a campaign. You know, you've got to be prepared sort of before it goes live and have sort of a plan in place of how you're going to market it, and sort of be, you know, organised and focused on it.
And in terms of your kind of user reach, are you Seedrs is global, I imagine, and Funderbeam as well?
Yeah, we can do it, and we have investors who have been like KYC'd, like confirmed from I think 69 countries last I checked. So it is, we're inherently aiming to be a cross-border platform.
Okay.
Yeah, I think we're about 40 countries that we can accept investment from
really?
memory. Oh, might have changed.
So that's actually
70. No. So not everywhere, but a lot of supported countries. Yeah.
So that must also give you a very good insight into the state of the crowdfunding industry, say in the UK, with regards to how it is spread out elsewhere. Are there any kind of differences? I know there's always, you know, the rivalry between US, UK in terms of tech, for example, and now obviously Israel, which was talked about in the previous panel. So I was just curious to see whether... Yeah,
I mean, well, the UK's really led the way on it, actually, and thankfully, due to our regulation and the FCA being, you know, working with the alternative finance industry really closely and being very supportive of it. In the US, you know, we can't actually crowdfund in the way that we do here yet. There are platforms there ready to go, but the regulation doesn't quite allow it in the same way. You can't have quite the same reach in terms of the investors that you can accept. So, you know, we're lined up to start taking investment from US investors, but sort of waiting for things to go through over there. And you know, it's the same. I keep an eye on Australia for obvious reasons. And it's, you know, the same thing there. New Zealand's very open to it, so there's a few few platforms that have sprung up there, and they've kind of got their eye on across the sea, and sort of waiting for Australia to open up and allow it. So, yeah, we've been quite lucky at this side of the pond, I think.
Cool. And what about you? Because I know that you were mentioning that you had a very strong presence in the Baltics.
Yeah. So I mean, it's the Baltic countries are small, but it's especially Estonia has an amazing tech scene for its size. It's really punching above its weight, and in terms of crowdfunding, it's the most crowd-funded country per capita. They have both the most campaigns and the most capital pushed into. So it's a very, very like, but it's always, you know, when you're in a very small country, you always use these per capita statistics. But it's we are like outside of Estonia, the UK is where we have the most investors, and we have people coming here, and we are working to get set up here. We have the same. We are not accepting US persons yet. But we'll also be able to do it in the future.
So yeah, obviously the regulation in the UK is much more favourable than elsewhere. And then the other thing I actually wanted to touch on, sorry, I've got my notes here. Do you think that the stigma around crowdfunding has fully lifted? And how would you say the state of the industry, how mature it is now, and where do you see it like going in terms in the long term in the next couple of years? Very easy question.
Has the stigma lifted? I think there's still some people. Yeah, I think it has for the majority of the industry. I think the people that apply stigma to it are the ones we're disrupting. I think some of the traditional sources of capital are the ones that still sort of sniff at it. And that's probably always going to be the case, and that's sort of fine. I think it shows we're doing our job if they're getting a little bit anxious about it. Certainly, I think for companies, it's I don't think there's any sort of stigma attached with accepting funds from the crowd. And I also think that we've sort of very much disproved that it's dumb money. Our investors are very savvy and asking great questions on discussion boards. And as you're saying, it's hard work to get crowdfunded. So it's not sort of dumb money anymore. What would you say? How about for you guys?
I mean, I don't even think like of a stigma. I think the only like very skeptical questions we're getting is like the dumb money. And also that, like, what if the company aren't able to deliver, and that's only directed towards reward-based crowdfunding. So we don't really deal with that. I mean, there's of course it's always like, I mean, something that we just have to be so careful with, and that what we're really always doing is just, I mean, it's early stage investing. It's super risky, and understandably, there are people who say, like, how can you just accept money from people? Like, how can you be sure that they understand the risks? And that's just our job to make sure that people really understand that, even like, no matter how good the company is at getting you excited about their story, it's going to be a startup, and it's going to be risky. But we are doing, I mean, it was like the maturing of it and like trying to move past that. We also recently launched, which is live now, an accelerator that's actually raising a fund through our platform. So as an investor, you're kind of outsourcing the screening and the due diligence and the finding and the training of the companies. So you give them some money, and they find 10 companies and invest into them on your behalf. And you can see the track record of the accelerator. So I think these kind of moves that kind of take the work to some people who are really good at it, and that's not necessarily the crowdfunding platforms. We're just a tool for all these like very smart people out there who are creating businesses or finding great companies and so on.
Sorry, no, go ahead.
As I say, and on the maturing, I mean, we've also just released a portfolio review. And so we've, 5 years in now, we've been able to look over every company that's funded. I think it was up until the end of last year, and look at appreciation in value. So, sort of reevaluating all the investments based on how they've done on further rounds, exits, or whether they've wound up. And it showed there was a sort of, over the entire portfolio, there was an IRR of 14.4%, which is really good in the industry. So we've sort of proved it is working, and that's not. And once you put in all the tax benefits you get in the UK, it's like over 40%. So it's quite an impressive return that we're looking at. And these are paper returns so far. This isn't sort of pure exits, but it is showing that a few years in, the model's working. People are picking quite well. A lot of our investors who have built proper diversified portfolios, which is what we really encourage, have really been able to sort of outperform that, even across the portfolio. So,
You almost answered my next question, actually, because I was going to just very quickly touch upon, you both mentioned risk, and from the information that I've been reading up about over the last few months or so, it's actually becoming a less risky way of investment, and I guess that also has to do with the quality of the pitches and the companies and the entrepreneurs that are going through the crowdfunding platforms. So I'd also be interested to get your insight on that.
I think also, like, if you look at it just from a statistical perspective, I think also there's a lot more companies doing several rounds. So that will, like, either way, will just bring down the risk as well. But yeah, definitely. I mean, if you compare it to 5 years ago, where this was completely new and no one knew what they were doing, and some people got it right the first time, and some people had to learn it. So I mean, yeah, it's getting less risky, but it's always going to be. I mean, if you just want a safe return on your money, then you invest in indexes.
Sure.
But that's
what's the fun in that, eh?
Yeah. I mean, it's risky, but that's the idea. There wouldn't be the opportunity for such great rewards if it wasn't. I think that's the point, and it's sort of just opening up this asset class to more people who might want to access the potential high returns. Okay.
And I don't want to put either of you in the hot seat, but I can't leave today without mentioning two of the things that have basically happened throughout 2016. So there's been a lot of impact, a lot of talk about the impact of Brexit and obviously Donald Trump winning the US election actually affecting negatively the amount of funding that's coming into the UK. I just wondered whether you expect, from your position in both companies, for that to have any kind of effect, whether positive or negative, on crowdfunding.
Yeah, I mean, we were obviously watching Brexit quite closely. We are, open across Europe and to companies across Europe, and we rely on sort of passporting, essentially, so passporting in the regulation to do that. Will that change? No. We'll get regulated where we need to get regulated to do that. So I think on that basis, we're not too concerned. In terms of investor capital, sort of capital drying up. Yeah, I guess it's of concern, but startups are usually do quite well in turbulent times.
Yep.
I think our startups and our entrepreneurs are great at harnessing the opportunity that comes in turbulent times and being agile and sort of innovating and finding new ways to do things. And also, frankly, like a long-term, high-risk, potential high-reward investment suddenly starts to look like quite attractive when the market's not doing so well. So, potentially it could turn out all right for us.
Yeah, that's exactly. I think it's really, or at least in my opinion, two not very, very good events that you're referring to. But I think it's not necessarily negative for us, because I think if VC funding is drying up or angels are more reluctant, then I think there's always going to be tons of people with tons of amazing ideas, and they're always going to need to fund those ideas somehow. And I mean, I honestly don't think it's going to be as bad with either of those things as people feel that it will in the immediate aftermath. Like, I mean, when I was talking to my British friends in the weeks and months after Brexit, they had a lot less positive feeling than they do now. And the same will probably go with the US election. But in the meanwhile, I think what we're doing is not necessarily going to be harmed either way.
Cool. And just conscious of time, just to wrap up, any kind of takeaway messages about industry predictions, or where you see the industry going in the next couple of years, and any kind of comment on the state of the scene before we finish?
Yeah, I mean, I think we're going to see, certainly in the UK, it's sort of been around for about 5 years now, and that's around about the kind of holding time we're sort of safe for many investments. So I think what we're going to see, hopefully, is some of these sort of some of the rewards coming through, some exits. The data is there, sort of showing that it's working, and our investors are making paper money, and I think that will certainly drive more investors to the area and more attention to it. So I think we've probably it was quite sort of sexy to crowdfund for a while, and then we might, it's become a bit of an old story for some people, and I suspect we might have another surge soon when investors start to see profits.
I mean, I think just like for us, and the whole reason we exist is that we think the future is that there needs to be a secondary market so that the investors can exit their investments when they want and not have to wait these 5-10 years and make real money, not just paper money, and like when you want. Of course, in the UK, it's going to be after 3 years either way, but it will. That's going to be the next big thing in crowdfunding for sure.
Great. So it actually does seem like the crowd has matured. So thank you very much for having us, and a round of applause for our panelists.